Now, Nvidia's products, of course, are at the center of a tech rivalry between Washington and Beijing. The Trump administration earlier asked for a 15% commission in exchange for allowing Nvidia and rival AMD to offer their AI chips in China again. But CFO Colette Kress told Bloomberg that the unconventional plan hasn't progressed beyond the early stages, and she says if the plan is not codified, Nvidia should be able to proceed without paying the commission. But let's talk a little bit more on Nvidia. We're joined now by Ray Wang, founder of Constellation Research, a US-based technology research and advisory firm. Ray, just want to start with your key takeaways from that result. I mean, plenty of things to be pleased about, but apparently for the market, a lot of things to worry about as well. Any surprises in there for you?
There's not a lot of surprises, but I think the important piece is this is 9 quarters in a row that they beat, and Blackwell sales were up 17%, and that's about $27 billion in sales. And they're also doing a $60 billion stock buyback. So overall, it was a really good quarter. The question is, what's out into the future? And that's what investors were looking for, hence the little dip at the moment. But I think one of the important things is that you're seeing this is a $1.61 trillion market by 2031 for AI. That's what our estimates show. And we're just at the beginning. So whether Nvidia has a great forecast for this quarter, 3 quarters out, there's still a ton of spending. Mag 7, 6 out of the Mag 7 are basically spending $80 to $100 billion on data center buildouts. And that seems to be continuing for at least the next 6 to 8 quarters.
Yeah, look, in terms of the growth rate that we've seen in Nvidia, the investment story as well, was it realistic to think that that was going to continue and potentially accelerate forever?
There's a point where it does slow down, but I think part of it has to do with the China numbers, as you were pointing out. There's about $32 billion in chip sales to China that they're losing out by having these tariffs in place. And so as they switch to single die versions of all their chips to be able to sell into China, you're going to see anywhere from 4 to 5 billion, 6 billion, depending where the tariffs come to play. There is still a lot of demand for Nvidia chips, especially as you see what's being passed through Dubai and passed through Singapore. There is a big demand in China still, despite what the government warnings are.
Yeah, a big demand, sure, but how much faith can we have around those forecasts for Chinese demand for Nvidia chips? Considering the narrative around U.S. restrictions keeps changing, and Chinese appetite for Nvidia H20 chips is kind of being leaned on.
Paul, actually, you're right about today, but I'm looking at 2 quarters out, 4 quarters out, when the trade deal and the tariffs actually resolve, we'll probably see the upside on the Nvidia chips, and we'll be coming back and saying we're missing $30 to $40 billion on the chip side. But that's actually not where the near-term demand is. It's going to come from sovereign AI. We're seeing a lot of countries aggregate their capabilities, build data centers, and build to actually serve in their language models. And a great example is what was happening in Saudi Arabia. That's going to be happening in other regions as well as countries build their own sovereign AI capabilities. That's the next growth area. And then, of course, where we go into robotics and physical AI, we're starting to see some traction there, as you can see from their earnings.
Yeah, also on the call, there were some concerns expressed around regulation, and particularly around this revenue sharing idea with the U.S. government. How do you see that evolving over the coming quarters?
That is a really bizarre deal where the government is taking a cut of the sales. I think part of it was related to being able to actually open the markets back to China as a concession. But I think we have to wait till all the chips have fallen in terms of how the U.S.-China trade deal looks like. There's so many concerns from national security. There's concerns on IP. There's concerns on trade balance. And the U.S. hasn't pulled all its cards out or played all its cards in the negotiation yet. But China definitely is intent on actually building a homegrown chip industry. And that's really the negative headwinds.
Well, let's talk about some of that share price reaction that we saw after hours. Nvidia was softer, but how rational does that move look to you in the context of the rather bullish, longer-term story that you're putting together? Do you feel that this stock is overvalued, undervalued, or valued just right?
That is a constant conversation topic as to what the valuation for Nvidia should be. I would say that you're going to see a lot of people jump in tomorrow and buy into the dip. What is interesting is Nvidia is the least owned by institutional investors among the Mag 7. And it's a question to see what other institutional investors are willing to jump in. Do they believe in that story? And we'll be looking at trading volumes. But we're a little bit light. We're still kind of in summer in the U.S. And we'll eventually see what will happen. But I think you're going to see see a rise tomorrow as people buy into the dip, because a lot of people are waiting to do that as share prices rose ahead of earnings.
Yeah, I just want to pick up on that narrative. I mean, it is the least owned among the Magnificent Seven of institutional investors. Why is that? Is it too expensive, or is there something else going on?
I think what happened is a lot of institutional investors continue to say it's too expensive, it's too expensive. And what they have is they've continued to miss out on the Nvidia boom. So they've been looking at what's in the second derivative and the third derivative where the AI boom will go. And they've been betting on energy in terms of small modular reactors and nuclear, the ability to do that. They've been betting on data centers, which are buying the chips. So they've been trying to take a safer approach. And yet every time they've continued to miss where the Nvidia shares were going. If you think about over the last 5 years, I mean, this stock has been up, I mean, at a ridiculous rate. I mean, you're looking at somewhere between 1,300% in 5 years, which is a huge number. And that seems very risky or volatile to the institutional investors.
Well, would you recommend a retail investor buy at these levels? As you say, it's not cheap.
I think you're going to see a lot of retail investors jump in tomorrow. As if the dip continues for a little bit, you'll see people jump back in.
Yeah, so what happens at the open tomorrow? Do you think the market's just going to shrug this off, or could we see a little bit of a pullback?
I would think that you're going to see people jump back in. We'll see what the after-hours trading looks like. A lot of folks have taken the profits before the earnings. But I think what you're going to see is the folks that did not get a chance to jump into this want to take advantage for Blackwell is heading. Blackwell Ultra is heading. They're looking at the roadmap. They're seeing 601 million in robotic sales. They're seeing the stock buyback, and they're also realizing that this is still on a rocket ship to 5 trillion in market cap.
Yeah, let's talk a little bit about those robotic sales, because that did come up. How much potential upside can you see there?
Well, the physical AI side is going to be important because we're going to see AI go from centralized AI moving to decentralized AI, which is at the edges. And that's robotics. That's the capability to actually do all the processing, not in a centralized cloud-based environment, but more in an environment where those individual robotics can make their own decisions and they come back. And, they had a federal autonomy day a few weeks earlier last week. And what they were able to show was that there's a 3-computer model, what they do from simulation in the Omniverse, the ability to do training, and the ability to run operations. That seems to be a very popular model. And in that room were a lot of folks that were from the federal government, and they were looking at it from anything from autonomous vessels to autonomous capabilities in terms of warfare, autonomous capabilities in terms of civilian use. And so you're going to see a huge demand there as it actually gets moved out to the market.
Well, we've already been hearing a lot about the Blackwell chip, and conversations already turning to Blackwell's successor, the Rubin, which is also going to require a substantial infrastructure build-out. Jensen Huang talking $3 to $4 trillion here. Aside from just buying Nvidia, what other opportunities do you see around that broader infrastructure and build-out story?
Yeah, there's a lot of opportunities to buy into the data center markets. You might buy into the hyperscalers that are doing that expansion. Companies like Oracle, companies like Google, Microsoft, and Amazon are leading that charge. You're also seeing stuff that's actually happening at the edges. And I think that's where you're seeing where energy is playing a big role. Looking at companies that actually have a small modular reactor capability or nuclear capacity, lots of hydro capabilities. You're seeing a lot of land being built there, and you're seeing a lot of data center build out along those lines. But we're also seeing the software side of the house pick up. You're looking at companies like Salesforce, companies like Adobe, ServiceNow, companies like IBM that are building out what they're on the AI side of the equation. And of course, there are other companies that are actually jumping in as we're getting to AI services. That's another area that's been picking up for the services side.
Well, you're sketching out quite a bullish narrative here, but contained in that answer, are there some potential risks as well? I mean, particularly around the energy side. Is there enough energy supply here to keep up with demand? And if not that, can you see any potential headwinds for this story?
You're definitely right. The headwinds are really around energy and really around China. What we're seeing are two things. There's this build out for advanced general intelligence and artificial general intelligence that's at the centralized level, and it's sucking up all the money at the moment. But what we're going to see is as we move to decentralized AI, you're going to see that move into other areas of the economy. And I think that's where the risk is, as there are other chips that are able to do that much more efficiently. And Nvidia in the future, looking at tensor processing units that are coming from Google, looking at other types of chips that are going to be put out at the edges, they're going to operate differently. And I think what you're going to see is a need for a smaller, much more compact, more efficient chip at the edges to be able to process less parameters, but be able to make decisions and automated decisions over time.